You know, in a tough economy, the usual business advice is pretty simple. Do more, sell more, be everywhere. But the furniture brand Lovesac? Yeah, they're basically tearing up that playbook. Instead of expanding, they're making a huge bet on doing less, but doing it absolutely perfectly. So let's break down this really bold pivot.
So here's the big question, right? It's what so many companies are wrestling with. People are being careful with their money, those big purchases are getting put on hold, and the entire furniture industry is feeling that squeeze. So what's the move for a brand like Lovesac? Well, it turns out the answer isn't to go wider, it's to go a whole lot deeper.
All right, so to really get where they're headed, we've got to first take a look at where they've just been. The company's latest quarterly results kind of shine a light on the challenges that kicked off this whole new strategy.
Now, at first glance, the numbers might seem a little meh. Lovesac's sales landed at $150.2 million, just a tiny bit shy of their own target. And they said it was because the market was choppy and shoppers were hesitant. But honestly, that number by itself is pretty misleading because the real story is hidden in the context.
Okay, so let's look at that context. While Lovesac's sales were basically flat, the entire furniture category, their whole industry, actually shrank by about 2%. So what does that mean? It means just by holding steady, Lovesac was actually stealing market share from its rivals. They were grabbing a bigger slice of a shrinking pie, which is a quiet but super powerful sign of strength.
But grabbing that market share definitely came at a price. Their profitability, what's called gross margin, took a real hit. So in simple terms, for every dollar they made in sales, they got to keep about 2.4 cents less than they did before. And this was because of a triple whammy: higher tariffs, rising shipping costs, and having to run more sales and promotions to get those cautious customers in the door.
So you've got this tough market, right? And your profits are getting squeezed. That kind of pressure, it forces a company to take a hard look at everything. And for Lovesac, the result was a massive pivot toward what they're now calling their strategic sweet spot. This quote from their CEO, Shawn Nelson, really just says it all. Instead of chasing after brand new things, the whole plan is to harvest the brand they've already spent years building. It's a fundamental shift from just expanding to, really intensifying their efforts on what already works.
And this slide really lays it out in black and white. The old plan was all about growth at any cost. New products for totally new rooms in the house, opening more and more physical stores. The new plan? Forget all that. The focus is now totally laser sharp. They want to absolutely win the living room and ignite the core of what they already do best.
And this pivot? It has some pretty big real-world consequences. That major product launch for a whole new room category, yeah, that's been pushed back all the way to 2027. And that plan to rapidly open new stores, that's on pause too. They are making a very conscious choice to trade that short-term expansion for a more focused, long-term execution.
So if they're not expanding out, what are they doing? Well, they're igniting the core. And this isn't just about, keeping the lights on. It's about a complete and total reinvestment in making their signature products, the stuff they're famous for, better than they've ever been.
And hey, don't mistake this focus for standing still. Not at all. Lovesac is promising that the year 2026 is going to be their most packed year ever for new product introductions. So this isn't about cutting back on innovation. It's about channeling all that creative fire right back to where it all started.
So how does this igniting the core thing actually work? Well, it pretty much rests on 4 key pillars. First, they're going to make the brand a bit more accessible by expanding their snug sofa line. Second, and this is a huge one, they are completely redesigning their flagship Sactionals so they can be made right here in the USA. Third, they're going up market with a new luxury line. And finally, they're tackling a major customer headache: delivery and setup.
Let's zoom in on that Made in the USA plan for a sec, because it is a really big deal. This isn't just about moving a factory. We're talking about a complete, ground-up redesign of the core guts of their Sactionals. The whole point is to make it possible to manufacture them in the US, add some new features customers have been asking for, and lock down their innovations with a fresh set of patents.
This whole thing is like a strategic domino effect. It all starts with redesigning the product itself. That new design is what allows them to manufacture it domestically. And because Lovesac has such a massive volume on just a few core products, they can bring in serious automation. And the end goal here, it's pretty much the holy grail of manufacturing, making a better product that's also cheaper to produce.
At the exact same time they're retooling their main product, they're also launching a more premium, high-end sectional. And the strategy here is really smart. First, it targets higher-income folks, which the company sees as the healthiest part of the market right now. But it also does something else. By creating this super premium option, it actually makes their core Sactional seem like an even better value in comparison. Pretty clever.
So you're probably wondering,
When is all this cool stuff actually going to happen? Well, the company has laid out a pretty clear roadmap, and it looks like 2026 is shaping up to be a total blockbuster year for them.
The year is going to kick off with a big focus on service. They'll start testing a white glove delivery option. By the middle of the year, that new high-end sectional officially launches. But the biggest moment comes in the summer, when the very first Made in the USA sectionals will start rolling off the production line. And all of this is happening while they continue to build out their more accessible Snug platform. It's just a year of focused, non-stop execution.
So all of this intense short-term focus, it's all in service of a much bigger, much longer-term vision for what the Lovesac brand can ultimately become.
And they've put a massive number on that vision. The goal is to get Lovesac products into 3 million households by the year 2030. That's the huge, concrete target that's driving every single one of these short-term moves.
But even that giant number is just a stepping stone. This quote from the CEO, it reveals the true scale of their ambition. First, be the most loved home brand in America, and then, one day, be the most loved brand in America, period. I mean, talk about aiming high, right? It just shows you the mindset behind this whole strategic pivot.
So that really brings us to the final question. In a world that's constantly telling you to grow by expanding, Lovesac is betting everything on focus. They're betting that by absolutely perfecting the living room experience, they can build a foundation to become one of the most iconic brands in the country. It's a really bold gamble, and I guess only time will tell if it pays off.